Afternoon, everyone. Welcome to Thomas Westcott's latest webinar. My name is Patrick Tigwell. I'm a general practice partner with the firm based in their Exeter and Tiverton offices, and it's my pleasure to be your host again for this afternoon's webinar. Also on the call in what's been quite a quieter week this week, I think, although I think that is a relative term, but quieter perhaps than others. Also on the call we have a regular, Mark Tibbert. Now Mark is our Head of Tax at Thomas Westcott and also heads up our COVID response team. So he coordinates the response from Thomas Westcott to the various government initiatives that have been brought out. And so it's great to have him on the call again. I'm also delighted to welcome our guest presenter today, Jamie Carr. I've got to be a bit careful there because there's another Jamie I'll mention in a minute. Now, Jamie Carr, he's a partner with Nash Co solicitors down in Plymouth and heads up their dispute resolution team. It was called commercial litigation, but dispute resolution sounds a bit fluffier and friendlier. Now, Jamie's a Pompey fan, so supports Portsmouth, obviously. So there's just three words I can say to that: Matthew Le Tissier. So. But I'm really pleased that Jamie's on the call. I hope he doesn't take that insult personally, because he's going to talk to us today about the issues relating to landlords and tenants. The government have introduced safeguards for tenants, as you're probably aware, and really how you should approach dispute resolution through this very difficult time for both sort of customers, suppliers, this sort of thing. I did mention Jamie earlier, Jamie Giles this is, he's our Head of Marketing and he's responsible for the technology throughout the webinar, but we don't have slides and PowerPoint today, so probably everybody's relieved at that. So what is the plan? Well, in a minute, I'll hand over to Mark for his update on what's gone on in the last week and just an update generally on the major reliefs out there. Then I'll hand over to Jamie for his section, following which we'll answer the questions that have arisen throughout the webinar or that we received when you registered. As long as obviously they might have been answered already by the guys in their presentations. I would say if you want to ask a question, please do so on the chat down there or the Q&A button, and we'll see them live and we'll try and answer them as best we can. A couple of things as always, if you want to remain anonymous, please post anon before your question. And also do remember that we can only really answer more general questions if you're giving kind of chapter and verse about your particular circumstances. We might have to do that after the webinar, but be assured we will respond to every question either on the webinar or, and if you're a client of the firm, it could be by your usual partner. If you find that you've got to the end of the webinar and you haven't answered your question but you'd like to ask it, then you still can. So you just email us at events@thomaswestcott, or one word, .co.uk. One thing I forgot to say is the webinar is being recorded, and he will forward the recording to you all in a sort of thank you for attending email. So without further ado, I'll pass over to Mark for his update, and we'll go from Mark, over to you.
Thanks, Patrick. As Patrick says, what I'm going to look to do is run through all the various reliefs in terms of what are grants, what are loans, and sort of others, and incorporating into that some of the recent announcements from the last few days. So starting off with grants, hopefully we've sort of covered this off in previous webinars, but just as a refresher in case anyone hasn't got around to claiming anything, the grants available are around business rates. In effect, there's three categories there. There's the small business rates grant relief of £10,000, and for the retail, hospitality, leisure grant fund of up to £25,000. They've been available, and the majority of businesses that are eligible for those seem to have claimed, although the government did earlier this week published a list by local authority of amount of funding given to those authorities and the amount actually claimed, and there is still an awful lot based on their records of amount actually unclaimed. So if you haven't claimed, then I would suggest claiming. It's still not too late. The money is sat with the local authorities to pay out, and it's relatively straightforward. The third category, which isn't available yet, is one that was mentioned a while ago. Guidance was published by the government to local authorities at the end of last week, and that's a discretionary rates fund for those businesses that didn't meet the criteria for the two main grant schemes, and the local authorities are being given discretion to give three bands of grant, either 25,000, 10,000, or the authorities are free to give out anywhere between £0 and £10,000 at their discretion. As I say, you're not able to apply for those non-discretionary grants at the moment. Each local authority is going to operate them differently, I'm sure. My understanding, though, talking to some of the people up in North Devon, is that they're looking to try and make the scheme available from the start of next week. And I'd imagine that as soon as that comes out, many other authorities will start to aim for next week as well. This takes time to get their systems up and running. The second main grant scheme out there, which has hit all the headlines, is the job retention scheme, whereby employers are able to recover 80% of employees' wages where they've essentially got no work for them and they put them on furlough status. Just a reminder that you can keep claiming for that. I think, as was mentioned in our webinar last week, that scheme originally was due to run until the end of June. It's been extended now to the 31st of October, albeit there will be two phases. So it will run as it is up until the 31st of July, and you continue making claims all the way through there. From the 1st of August, the Chancellor has indicated that the scheme might start to get scaled back in some way, i.e. the government might not contribute all 80% of the employee wages, or they may allow some part-time work as opposed to no work at all. There have been no further details on that. They will no doubt come over the coming weeks. It's also worth just remembering that that scheme is there to try and avoid you having to lay people off and make redundancies, and that's why there's such a long time scale on it. We are starting to see businesses that for some reason are already starting to lay people off where they put them on furlough. Personally, in my view, that's a bit premature because there is no cost to you as the employer if you've agreed to pay someone 80% and they're on furlough. Make use of the scheme for as long as possible rather than making people redundant. The third grant scheme is the Help for the Self-Employed, the Self-Employed Income Support Scheme. Went live at the start of last week. Seems to be going very well. Effectively, if you haven't already claimed, and it's quite a simple process, you just go online, check your eligibility. Everybody now can start applying. We're past sort of the phased part where they were only allowing certain people to apply at a certain time. A couple of issues we have come across is where HMRC have made incorrect calculations, or they are saying you're ineligible when you believe you should be. There is a an appeal process in that instance, and we would strongly suggest using that. It is taking time for HMRC to deal with that, I think due to the number of staff they've got dealing with it. And a couple of worrying things we've seen is where people have been told they're either ineligible, they're being referred back to their accountant by HMRC. There's not a lot we can do because we have no involvement in the process. Or if you're unable to make the claim online, there is a phone number you can ring to make the claim. I'm aware of a couple of instances where people have rung that to make the claim and have been told they can't do so, and talk to their accountant. Our advice in that instance is simply just ring them back and hope you get someone different, because the individual that's telling you that is wrong. We can't make any claim for you. And then the final grant one, it's been a long time coming because it was announced originally right at the outset back in March, is around statutory sick pay. And that is if you've got individuals that have been off sick and you're paying statutory sick pay, then for the first 14 days, the government announced back in March that you as the employer will be able to recover the statutory sick pay from HMRC. The claim portal for that, even though it's been is going live next Monday for some reason, even though it's bank holiday, even though the scheme has been available since the 13th of March. So it's worth just checking what information you need so that you are in a position to make the claims as soon as possible. That's it in terms of grants, i.e. money that you won't have to pay back. The second main tranche of support that businesses have available to them is in terms of loans, and effectively there's 4 types of loans now. One that doesn't apply to very many businesses is the CL bills, which is for the large businesses, i.e. where their turnover is more than 45 million, and you're looking to borrow up to £50 million. There's very few of those loans, unsurprisingly, have been given out. But what the government did announce on Tuesday was that they are extending the value of those loans from a cap of 50 million up to 200 million as of next week. Again, I can't see there'd be huge demand for those. The one that came underneath that and has been around for the longest is C bills. Effectively, any business with turnover below 45 million can apply for loans of up to 5 million, subject to turnover and various security requirements. That scheme will be available until at least the 31st of October. Again, it was the first loan scheme that was announced by the government. There were an awful lot of applications, but of those applications, probably only about 50%, based on numbers released earlier this week, have actually been accepted. And it only accounts for about 30% of the money lent under the various schemes. The most popular by far in terms of loan schemes is the bounce back loans, which have been around now for a few weeks. Essentially, businesses can borrow up to £50,000 or 25% of their turnover, whichever is the lower. Again, they're available until around about the 31st of October. Very simple application process, and the money is released very quickly. And although it's been around for a very short period compared to C-bills, it counts for about 64.5% of the money lent under the various schemes, with about 14.2 billion having been lent up to the start of this week. And to say it's a very simple application process, around 80%, it's around about an 80% acceptance rate so far. And the final loan scheme, which in my view will have very limited applicability to people, is around the future funds. It went live yesterday. It's aimed at innovation firms and effectively works on a match funding basis. If you can raise at least 125,000 from another investor, the government will effectively match that 125,000 up to a maximum of 5 million. The reason I don't think there'll be much, or it won't be that applicable to many firms, is it's around convertible securities with very stringent terms on them. And there's also a requirement that to apply, you have to have raised at least 250,000 of equity within the last sort of 3 years. So that's it in terms of immediate support, in terms of either grants or loans. A couple of other support packages available for businesses that are always worth looking at in terms of around deferment of tax liabilities to help cash flow. Any business with a VAT liability arising before the 30th of June can automatically defer that liability so long as it's paid by the 31st of March next year. There will be no interest or penalties. Worth remembering, you still have to file your VAT return, and if you pay by direct debit, to avail yourself of that deferment, you need to cancel your direct debit. It's important, therefore, for anyone with a 30th of April quarter end, just to remember that if you do want to do that, you need to cancel your direct debit in the next few days so it doesn't get taken. For self-employed and any individual with a tax liability falling due on the 31st of July this year, again, that is automatically deferred, and if you want to, until the 31st of January 21. And if you've got any other tax liability, PAYE, corporation tax, etc., that you can't pay at this point in time, then effectively you have to agree a time to pay arrangement with HMRC for those. The one thing I would add to that is all of those are deferment measures. It's pushing the cash flow. It's helping your cash flow now, but it's pushing the problem into the future. And therefore you need to be comfortable, if you're doing that it is the right thing to do and you are going to be able to pay it. And a couple of announcements that have come out during the course of yesterday that will be of help to some. One is around, there's new insolvency or temporary insolvency and company law changes that are coming in. Not necessarily financial support, but it's more admin and to ease the hopeful stress a little bit on company directors. There's a relaxation around the rules around wrongful trading, so that if you are insolvent at this point in time, but you're looking to try and trade out of it, you shouldn't get penalised or accept personal liability for doing so. And there's a strengthening or a relaxation around some of the measures creditors and that can take in an insolvency or to lead up to an insolvency. And finally, for charities, which I know our charity team are currently just reading through the detail of what came out very late last night, is around the previously announced 750 million support for charities. The application process for a number of the funds linked to that are starting to go live over the next couple of days. So as I say, our charity team will be looking to put details out about that. And that was a very quick run through of all the available reliefs.
Yeah, thanks, Mark. A couple of things then. We've had a question actually from Karen Gigg here. She's saying it's about the interaction of whether you can claim the small business, well, it's not the small business rates relief, it's the rates grant, isn't it?
Yeah.
If you are already in receipt of, in this case, charity relief. I'm not quite sure which charity relief she's talking about there, but is that, do you know, Mark, about whether you can claim that grant in addition to other sort of forms of government help?
My understanding is you can still apply for the grant so long as you meet the conditions. So the small business rates one is that you have to have qualified, the property you're in qualified for small business rates relief, or one of the other reliefs linked to the small business rates relief. There was no exclusion if you're a charity. So long as you met those requirements, you could still apply for the grant.
Yeah, okay. And obviously you've given us a very great sort of summary of what's happened, but there's over the last week, but there's still nothing, is there, really, for the director shareholder running his or her small company. We've had a question, obviously, well, more of a statement really, just saying, well, you know, they seem to have been a neglected group. Now, I know that, do you think there's a feeling in government, well, you set up this really probably for tax purposes, you've had a tax advantage over the years, is it sort of tough? And I know we were discussing this the other day, weren't we? And you were saying, well, there is a logistical issue with this. Can you just explain that?
Yeah, the feedback we've been getting, I know there's been a lot of pressure being put on government for sort of the forgotten group of those director shareholders where it's low salary and they take dividends out, because although they can claim furlough, and it was clarified that a director can make a furlough claim for themselves, the practicalities around how do you reimburse them for dividends in the same way as you do an 80% of the salary, is it's a very complicated, it would be a very complicated process to distinguish between a director shareholder receiving a dividend and just a general investor receiving a dividend. And I think there's concern within government as to how they could do that. I haven't heard anything recently, or that there was any real appetite to try and look at that. They felt that the amount of reliefs out there sort of covered enough of the people.
Okay, just a couple more queries or questions before we move on to Jamie. Our old friend of the webinar, Brian Sherwin, he's saying, do government grants count as turnover? Now, my view on that would be, well, they're obviously taxable mostly, aren't they? But say the self-employed income support scheme would be taxable, but my view is it wouldn't count towards like a VAT threshold or...
No, yeah, you're effectively right there, Patrick. All of the grants, so the self-employed, the furlough, the business rates grants that you receive are all outside the scope of VAT, so they have no VAT implication. In terms of in individuals' accounts or businesses' accounts, the general consensus on how to disclose them is you disclose all of them as other income, and where, say, it's the job retention scheme money that's coming in, you keep the wages disclosure as the full gross amount that you've been paying, and you show the grant income as a separate line. You don't net the two off.
Okay.
Essentially the same as you would do with any other grant income you would get. It's always disclosed separately.
Yeah, okay. We did have a comment actually also about, what was it? The question, can employees on furlough be made to take holiday whilst on furlough, and does the employer still pay them at the 80% rate? I think we sort of covered that last week with John Dunkley, didn't we? And I think you can, it's a dialogue with you and the employees, but I think you can ask them to take holiday, but you would have to top it up to the 100%, I think. Would you agree with that?
Yeah, that's entirely correct.
Yeah.
Yeah, there's nothing to stop you asking employees to take holiday. In general, if you want to force them to take holiday, so if in the instance they don't actually agree to take any holiday, but you want to force them to use some of their annual holiday entitlement up, you have to give them twice as much notice as the amount of holiday. So if you wanted them to take a week's holiday, you have to give them at least two weeks notice before they take that holiday. And then if they are taking it whilst on furlough and they're only being paid 80%, you have to top them up to 100% of their normal.
Yeah. Okay. And then just one final thing, just a comment really about the discretionary fund. We've had a comment that in this particular case, Cornwall Council seems to be sort of dragging their feet about this. I mean, I was looking at the guidance before the webinar, and it just say that obviously because they're not, by the nature of the fund, they're not going to be rateable businesses, particularly that would be that the councils would know about necessarily. Each individual council is going to have to develop their own method of application. So it's a case of looking on their website to see what that is. But obviously we can't really comment on individual councils and what they get up to. And I think we'll leave it there for now. Obviously Jamie's been waiting very patiently, so there are a few more questions, but on his sort of area of expertise. So Jamie, if I could pass over to you and you know, sort of give us the benefit of your wisdom in these trying times.
I will do my best. Thank you, Patrick. Despite the barb earlier with Mr. Letizier. Well, and thank you for having me here as well. As Patrick said, I'm the head of the commercial dispute resolution team down at Nash Co, based in Plymouth. And I thought it would be useful today to address two things, largely coming out of queries we've had in the last couple of months from our clients and informed by questions ahead of this webinar. Looking at the state of the court and dispute resolution generally, what does that actually mean? What's the effect of the lockdown on how businesses resolve disputes? and then specifically looking at a little bit on business tenancies, and specifically focusing on issues that tenants are having coming out of the lockdown as the restrictions thaw. So dispute resolution, I think the first point to make is the courts never shut down. There's been no closure. They are under significant pressure, and to give you some idea of that, the court local to us, the county court at Plymouth, I think is, as of last week, is some 51 days behind in processing their post. So any hard copies coming into the court, any transfer proceedings in, there's 2 months before you even get a reply. Now, the courts have gone some way to alleviate that pressure. Video conferencing is now commonplace, all the way up to full-on trials. They have recently engaged what they call their priority case list, that really focuses on what they consider to be the most urgent matters, which, generally speaking, your family law disputes and injunctions. Of course, it does mean that the things that they don't consider to be urgent have fallen even further down the pecking order, and there's even greater delay. So the picture you're looking at now is businesses coming back into the office, and perhaps there are commercial relationships that have been put under pressure over the last few months, and there are disputes that can't be resolved. The picture really is that the court is an increasingly unattractive place to look to resolve your dispute. The backlog of cases, the adjournments that the backlog is causing, and what as well we expect to be a huge influx of new cases over the next few months as businesses return to the office. So I wanted really to look at three means of alternative ways to resolve disputes. First of which is mediation. And many of you may have gone through a mediated process before. To me, mediation is a formal form of negotiation. Typically far, far cheaper than going down the court route. It's often, well, it's significantly quicker as well, and it gives the parties greater control over how they're resolving any dispute and on what terms. The parties will choose together to appoint a mediator, who's typically a legal practitioner, often an experienced solicitor or barrister. And the role that person takes is not to decide the dispute, but to flesh out the issues, address the options, and really lead the parties to a settlement. And typically that formal process only lasts a day. Despite the complexity or the simplicity, it's generally a day process. Now, at the end of that day, it's not binding. If the parties aren't happy with where they end up, they can walk away. Hopefully that's not the case, and there is an agreement, and if there is, that can be formalised at the end of that day. It's part of an agreement, and you've resolved everything then quickly and fairly inexpensively. The Centre for Effective Dispute Resolution actually has some quite incredible figures around mediated disputes. It says 89% of them result in success, which is high, but I think it does illustrate how effective they can be. Number two is what's called early neutral evaluation. Now, what does that mean? It's very similar to mediation. It's not a binding process, so the parties come to it willingly. Rather than a mediator, it's an evaluator who is appointed, and that's typically someone with experience from whichever business sector that's relevant. It may also be a member of the judiciary who's perhaps retired, but with that specialist knowledge. And their role, again, they're not deciding the dispute, but they're giving an informed specialist view. And the purpose really is to indicate what a judge is likely to do should the matter go to court. So it really, the outcome is really designed to inform the party's negotiating position. And it, again, very successful process, avoids the need to go down the court route. And as I say, again, the figures on it are very, generally very impressive. much quicker, generally far more inexpensive. The final main route I wanted to go over, expert determination. Now this is a binding option, so that the parties submit to a decision at the end of the day, and rather than appoint someone who's going to mediate it, they're appointing an expert in their field. Now, and that person is going to make a decision. The process really is designed for technical or scientific disputes where there are professional or technical issues to address, not really the forum for any legal argument or factual disputes. The expert will determine the matter on paper, so there's no need for a hearing, generally very quick, comparatively inexpensive again, and as I say, the decision is binding, and if the parties don't comply, it can be enforced through the courts. So again, comparatively quick way of resolving something in a slightly more formal way because it's a binding process. There are other ways of means of resolving disputes, and the most obvious perhaps is arbitration. Generally, if there is a dispute that can be arbitrated, it will be provided for as part of any contract. And I think the point I would make is there are a plethora of options out there if and when a dispute presents itself. And in the current climate, the correct way to resolve that dispute is unlikely to be court action. And I think the correct route is going to be dependent on the type of that dispute, any monetary value to it, and the need for any quick or interim resolution. There is going to be a correct process, it's just knowing which one and whether or not that can be agreed. So I'll move on to talk a little bit then about issues under business tenancies. And of course, the impact of business shutting down has had a huge effect on landlords and tenants. And in my experience with the clients that I work with, landlords, well, the rent is their business. The tenants being able to pay the rent when they're not able to operate their business is now impossible, and it's perhaps their biggest outlay or one of their biggest outlays. And I say all this, of course, noting that the next quarter rent will become due in the next couple of weeks. So I think it's important, certainly, for tenants to be conscious of any possible options open to them, and a line of attack, really, if they find themselves now in a position where it's all very much back to work, but the business is not yet there, which I think is going to affect certainly a number of our clients. I think the starting point with any rent dispute is going to be what the contract says. Now, many commercial contracts will make provision for a rent suspension clause, which does what it says on the tin, really, but they generally tie themselves in to ensure risks and physical damage flowing from those risks. And that doesn't lead naturally to issues arising from COVID-19 and the lockdown. Will depend entirely, of course, on how any clause is worded, but it's unlikely that I suppose would be of any immediate help. The next step on that ladder is to consider whether there's any wider provision in that lease where the parties have agreed to suspend obligations on certain events. You may have heard the term force majeure bandied around in the media over the last few months, and that's exactly what this is. And it is only a contractual position. It has no legal definition, force majeure. It does exactly what the parties have agreed that it would do. So it's really important that you know what the contract says on it. Any such clause, it doesn't even have to be called force majeure, it can be called anything, but it should set out what events it relates to. So these are all foreseeable events that the parties agreed when they entered into the contract. These can be defined narrowly. There could be reference to war, industrial action, specific weather events. There can also, I've seen reference to pandemic and flu epidemic, which may be wide enough in themselves to cover COVID-19.
Amy, can I just sort of interject there? Because I think what you're saying is very interesting, because we've had all this with insurances not covering the pandemic of coronavirus. Would you say this is would this be the same with these force majeure kind of sort of aspects of contracts that you've perhaps seen?
Yeah, absolutely, yes. The difficulty with these clauses, there's two separate things. There's the contractual arena. The force majeure is what the parties have agreed, and often those things are not drafted with sufficient clarity to make clear whether or not they were intended to cover a pandemic. So you end up having a dispute, and then it's a case of, well, we need someone to interpret exactly what was intended to be covered by this clause. And I'll come on to the possibility of a frustrated contract, which is similar conceptually, but it's the law rather than the contract. I think what I mentioned earlier, we're going to see a lot of new cases, and the court's going to be put under a huge amount of pressure. And I think a big part of that is drilling down on whether or not there is an active force majeure clause, and whether parties are obliged to do things that they don't consider themselves any more obligated to do. So it's going to be a huge area, I think. And I mean, you know, it's almost a discussion topic in itself, force majeure. We're looking at the events, but we're also looking at what the clause says the impact of that event has to be. Has it delayed performance under the agreement? Has it caused a delay in an ability to pay rent or in the business activity? Has it made something impossible? Has it simply made it inconvenient? All about the definitions and all about the way that the clause is worded into how it might apply. And of course, if it does apply, how long does it apply for? If there is a rent suspension, when is that reinstated? What does the clause say? Who makes that decision? Generally, these business entities will include a force majeure clause, and many of them will call themselves force majeure. Unfortunately, they're not always drafted in a way that gives clear answers to these questions. And of course, very few contracts were drafted with COVID-19 in mind. So there's no clear answer. It's a case of what does it say. But I mean, I've been in situations where certainly clients have been able to rely on force majeure clauses. And as I say, if they can't, the other option, and in the context of business tenancies, it's perhaps very unlikely. But if the contract doesn't give you scope to suspend obligations to pay rent, the law, the legal doctrine of frustration may apply. So it's entirely separate to the contract, but it's the law saying if there's a contractual relationship that can't be performed, it's become impossible to perform something, typically, historically, because something has become unlawful, then the law steps in and says any future obligations are discharged. I say that, as I say, it's just how business tenancies are constructed. It's unlikely that that would apply, but as a general point, it's worth bearing in mind, because I've had several clients whose businesses have been, or their contracts with customers have been frustrated because they can't open their premises. And there's no formalities involved. They're either frustrated or they're not, and it's just how the events conspire. So I think if you're a tenant and your contract doesn't help you, there's no force majeure perhaps, there's no rent suspension, and if we assume the contract hasn't become frustrated, really then the difficult position tenants find themselves in is really having to negotiate terms with their landlord. Now, in my experience, a good landlord wants to have a good tenant, and generally landlords will be very open to agreeing reasonable terms. in my experience, rental holidays, and I know that phrase has been used a lot in the media as well, so a break from liability for payments, concession on how much rent is, or even varying the length of a lease to allow for further payments are all options. And as I say, landlords are in a very difficult position themselves, and I think tend to be open to agreeing reasonable terms. But it's a case of communicating and the parties getting around the table.
Okay, so on that then, we just had a question come through, Jamie, sorry to interrupt, from Sophie saying, well, so if COVID-19, the pandemic, is not actually included in this list of force majeure, she's saying, well, presumably tenants aren't then covered. Would that be your assessment too?
If you're not included, well, if it's incredibly unlikely that COVID-19 will be included.
Yeah.
It's unlikely. Most of them I've seen won't include the word pandemic either. Some of them will be drafted incredibly widely though, and they may simply say any circumstances outside the party's control. It may be that is sufficient. So I wouldn't say it's that narrow. And it would be more a case of looking at the clause in the round. But certainly, if it's not drafted widely and it doesn't make reference to a pandemic, or I've had flu epidemic, is that wide enough? Because what you're trying to do, you're interpreting what the parties agreed. So even if it's an epidemic, can you fit in? Were they reasonably foreseeing a pandemic when using those words? So unfortunately, as is often the case, it's not a yes or no answer. But how has it been drafted? How wide is it? And can you fit the meaning into the words that have been used?
Okay. Just to, while I've sort of interrupted the flow there for you, it's we've just had another question about obviously the return to work. And this lady Carol is saying, and she's commented before actually on the webinars, this is a rented accommodation, you're coming back into it, but the water hasn't been used, so you have stagnant water and possibility of bacteria and legionnaires and all this horrible nonsense. Who's responsible in that situation, do you think? The landlord or the tenant themselves?
Well, it would depend on exactly what the tenancy agreement says.
Yeah.
I think certainly maintenance of things that are going to cause things like legionnaires are going to be likely to be the responsibility of the landlord. Payment for utilities, I think as a matter of contract, unless the tenancy agreement provides that the bills are going to be paid as part of the rent, those bills are probably in the name of the tenant. I have heard that some providers have had, I think specifically for students, have given some concessions where they're not in occupation, but I think ultimately that would fall on the tenant's head unless they can come to some agreement with the provider. If they're otherwise paying the utility bills, they're responsible for those payments.
Yeah, and the government, just another question here, the government have obviously introduced this protection for tenants unable to pay rent because of coronavirus, be protected from eviction, and that's for 90 days, is that right? And
yes.
What happens after the 90 days? Would you expect a sort of flurry of claims, or do you think it'll be extended?
Well, there's two separate protections. There's protections that have been put in place specifically for landlord tenants in the residential sector. Yeah. And then under the business side of things, there's some element of protection that's been put in to prevent landlords determining leases where tenants haven't been able to pay rent because of COVID-19. In terms of the latter, this protected period expires on the 30th of June. So what the legislation says is that if tenants fall behind on rent, it's likely that within their lease, the landlord would have the right to forfeit the lease and re-enter and take possession of the property. They're prevented from taking that step until the 1st of July. Now, what that doesn't do is negate liability for rental payments. And it means at the moment, unless the legislation's changed, from the 1st of July, the landlord, unless there's any other agreement, they will be able to, re-enter or seek to have possession of the property. With the residential side of things, it's somewhat different. I believe the date is now October time, but I would probably have to look a little bit more deeply on that. There is some protection there. It's the point I would make, the point I'm going to come on to, is it's fairly limited, and I think it's subject to change.
Okay, yeah, thanks for that then, Jamie. We've just actually had a comment from Sue Dowdall here, saying that her water company has recently sent us details of how to flush the system when we return. So that might be worth sort of communicating. I think we'll just need to, I'm conscious of time, we could probably talk about this all afternoon. So I'd like to kind of wind things up on that regard for now. Obviously, you mentioned the fact that this sort of 90-day rule does apply to private tenants and landlords as well. I'll just come back to Mark, really, and this might set the scene for a future webinar that we'll have, is on leisure and tourism as a sector where, and I'm just thinking here that obviously we mentioned about the small companies, shareholder directors, where there's not a lot being done for them necessarily. But the leisure and tourism industry seems to be one of these that will suffer more than most, as they might not have a return to work date. So I don't know what your thoughts on that are, Mark, and for a sector where it's, as I say, they may not be able to return very quickly at all.
Yeah, it's unsurprisingly, given where we are, it's the vast majority of our clients are impacted in some way or related to the leisure and tourism sector. It is increasingly concerning for them in terms of when they are likely to get open. I think what's worrying for some is as soon as restrictions are being lifted, people aren't necessarily applying common sense and listening to the guidance that's given. I think just up where I am in North Devon, gone across the national press, just the number of people that immediately flocked to the beach and the car park. I know a number of the car parks that were concerned there, and they had been discussing other plans to go for a more phased reopening. All of that got blown out of the water when he essentially gave people freedom to move everywhere. I think the concern for the leisure and tourism sector will be if people continue to work like that, then the restrictions will be put back in place, and it just makes the problem worse for them. I know it is something that we're looking at maybe doing a webinar on next week, specifically around the leisure and tourism sector with a few of our leisure and tourism team.
Okay, thanks for that, Mark. And I'd like to, I'm just conscious of time, sorry, we have gone on a bit. So I'd like to wrap things up there. If we haven't got to your question, we will, as I say, get to them. If you'd like to ask a question, do email us at event@thomaswestcott.co.uk. And obviously, if you are a client of ours, please mention the partner that normally deals with your affairs, and we can potentially get him or her to answer your question. As Mark said, we'll have a seminar next week, probably on the leisure and tourism industry, probably same time next week, Thursday at 2. I'd like to thank Mark and especially Jamie for their contributions today. And obviously you, our attendees, it's great to have you on the call. And what I'd just finally like to say is have a great bank holiday weekend. And again, sort of channeling my inner Ron Burgundy, I think I do need the maroon jacket. Stay safe, Devon and Somerset. Thank you very much. Bye for now.